Hi, this is Anthony Parent of IRS Medic, and in this video, I'm going to go over why getting a 1099K could actually be a good thing. But first, let's talk about what's going on right now. The 1099K came out years ago, and the original rule was if you had transactions over $20,000 and you had more than 200 transactions, you would get this 1099K, alerting the IRS to the income that you're making, whether it's on eBay or somewhere else. Now, what happened with the American Rescue Plan of 2021, Congress got the idea that, well, that $20,000 threshold was way too low and that the threshold should be $600 a year. Well, this created such a problem that the IRS decided to ignore that law and just continue with the old law. Perhaps at some point, the $600 threshold, which is the law, will be imposed. But until then, the IRS is just going to do whatever they do, apparently. Now, either way, I want to point out something. It's a great thing. It really can be a great thing because a 1099K is an admission by the IRS that you have a business. Now, here's something to think about. Any activity, no matter how pleasurable or unpleasurable, it can be a legitimate business, and the deductions are generally deductible as long as you have a plan to treat the activity like a business with a profit motive and act accordingly. So let's talk about some things, and this is the best way I can think about doing it. The IRS doesn't want you to write off your hobbies. And so I think probably the top hobby loss that's claimed are horses and boats. Those are the things that people who are doing well often look to write off because they enjoy doing it, and both things cost a ton of money. So time and time again, people try to write off their hobbies, and the IRS comes down, oh no, you're just trying to write off the fun that you're doing. Well, here's a case that didn't get a lot of attention, and it really should have. There was a case in the early 2000s where an interior designer wrote off all her horse expenses, and the tax court agreed with her, said, yes, you can. And so what did she do differently? Well, what she did differently is she created a business plan, and she said, well, I'm an interior designer, and I specialize in horse-related interiors. And the only way for me to demonstrate what I do is to actually be active in the horse community, build a camaraderie with fellow horse owners and bring them over to my place and they could see my stuff, talk to them and really get in tune with what their needs are. And I'm very well versed and I have high credibility. Well, the tax court agreed with it and wrote off all of her horse expenses. Now, oftentimes, the people believe that you can't write it off because you enjoy doing it, and that's just not the case. The difference is you got to treat it like a business. So now let's think about this. Let's say that you get a 1099K, and let's say you get a 1099K of $20,000. Well, now one thing's like, well, is that 100% income to you? Well, what if the thing you sold cost you money? What if it cost you $10,000? And then what if you had to travel and do all these things in order to get it and list it and move it and store it? So you would have a small gain. So you don't have $20,000 of income. You would have the difference between your expenses, what your basis is, and what you sold it for. Now, what would happen if what you paid for it is more than what you sold it for? Well, in that case, isn't that a loss? And isn't a loss a good thing? So now here's the thing. If it's personal goods on eBay, that your own stuff, unless you can prove you are at eBay, it's not necessarily deductible because you could see it as a hobby. But if you are in the business of buying and selling things and you keep track of your inventory, when you bought it and what you paid for it, seems like to me, losses from your sales should be applicable. Now, here's the thing. What if your activity doesn't have a profit motive? Well, if you add a little tweak to it, what if you have a horse business that really has no legitimate way to become profitable? You have no way to monetize this. There's really no way to do it. Well, is there a way to incorporate public service into your hobby to make it a charity? So, okay, maybe you can't write it off as a business expense, but perhaps you could write off some of your expenses for a charity. And even if you get a 1099K, maybe what you're selling has charitable purposes to it. So that's something to think about. Either way, make something a business or a charity. And now I just want to go to my screen here and my next page here. And this is the big chart. And this is sort of what will explain it all, okay? And this, hopefully it will. This first column here of the earned income, the tax brackets most people are familiar with, well, those are the tax brackets for when you're a waged employee. When you're a waged employee, and let me tell you something, there is not a lot of tax savings involved. There's really not too much you can do. It's max out your retirement, deduct everything you can, and we're covering about 90% of what's available to individuals for tax savings. Now, individuals with earned income, you have other types of income, it can be really helpful, like business income. So business income can still be taxed pretty high, but oh boy, there are deductions that erupt and can really, really help you out that you can take advantage of that you just simply can't as an individual. And as I was mentioning too, one of the best types of income to have is the nonprofit tax exempt. So you're moving yourself, you're moving your income, not so, here you're kind of stuck with what you have, but you have your business income, maybe you get a loss to reduce that, and then exempt income could also give you a tax deduction. So I think that's pretty nice. Now let's talk about some of the business strategies. One thing I would just say is if you do have if you're self-employed, this goes for everybody, whether it's a 1099K or not, the top savings that I see people not do is classify their business as an S corp. Okay, that's a little tax work there, but basically what it does, it gets rid of your Social Security and Medicare, a lot of it, and those can be really, really stealthy taxes. When you're self-employed, you're aware of that 16%, approximately 16% extra in tax you get to pay. Then the deductions that would apply for most businesses with the 1099K, you get an Augusta rule, home office deduction, accountable plan, business meals, and travel expenses, along with your Section 179 expensing. And I like this one: make money off your kids. You could fund a child's IRA, and you might be able to do that tax free. There's a family office management company. And if you have your family involved and you're buying and selling on eBay, that might be something to look at because it could give some additional benefits along with just straight out hiring your children. And the way that works is every U.S. person comes with an exemption on earned income, around $13,000. And so for each child that you have, think of that as, well, you're paying for them anyway, and it's a way to get $13,000 out tax-free. So that's a fantastic strategy. Now, a little bit about us. We help U.S. business owners around the country and the world be in compliance and lower their taxes. And we also solve tax problems that others create. Go to irsmedic.com to book a time to speak with us or request a free quote for our services. This is Anthony Parent of Parent & Parent LLP, IRS Medic.